Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very beautiful weekend that you had a very nice day in the markets as well. In today's action, unfortunately, the S&P and the Qs come down once again. It's been a very rough last few weeks in the market, hasn't it? The S&P right now coming down into oversold conditions. The Qs also into oversold conditions as well. The Fear and Greed Index right now is at a very low print of 9, and investor sentiment remains extremely bearish on the market with good reason, because the bearish narratives are in full swing right now. The private credit stress that we have in the markets in terms of financials, the war headlines that continue to plague the markets every single day, and the thoughts of a possible global recession as heightened energy prices cause some havoc right now in Asia, could potentially pour into Europe, and especially could then potentially pour into our own supply chains here in North America. So in today's video, guys, we're going to be going over everything. Are we possibly close to the bottom of the market as we are in oversold conditions? Big drawdowns with many of our favorite tech names down 25-35% from the highs. Or is there possibly more to go, and should we still be a little bit cautious with our positioning? Of course, we're going to talk about that in today's video. But before we get into today's video, guys, you guys know that I always like to preach cautious optimism in terms of our positioning in times like these. You also know that I'm a very big fan of building further positions in high-quality companies that you'll be holding for the next 5, 10 plus years. However, sometimes, especially in times like these, the bears are very strong and very vocal, right? Especially on social media. And although I considered myself a bit of a contrarian whenever that happens, well, sometimes you kind of feel a little bit left out. And I just feel that my thumbnails just aren't hitting as hard as people who have tons of fire in the background and showing charts with massive drawdowns. So I wanted to hear your guys' opinion, right? Should I start doing some of those as well, just to kind of join the crowd, so to speak, right? So I got an AI to help me out here with a few thumbnails, and we're gonna start off with this one. Tell me what you guys think. What about this one? You guys know I've been using the same thumbnails for years, but what about this, right? Maybe this one, completely effed, sell the SPY and buy a bunker. How about this one right here, maybe? I quit investing. I'm going off grid with a little, remnant of a McDonald's chain here, because of course, in the current market environment, we can't even go get jobs at McDonald's anymore, can we, right? With myself here holding a little grenade in full military attire, or perhaps maybe this one as well. I warned you, that's a very popular headline now. I warned you, did you listen? A decade-long depression coming. With, endless food lines, but unfortunately in a nuclear apocalypse, you just have no food. And here you have me all blown up with clothes in tatters, right? So I don't know. Tell me what you guys think, man. I'm always a contrarian, and I do enjoy giving a decent dose of optimism in markets every day. But who knows? Maybe, as you guys know very well, the fear gets the views, and the fear creates the sentiment, and people often jump to the worst possible conclusions. Now, are there things in the market right now that should leave us a little bit nervous as to the near-term future? Of course. And that's been the case frequently every single year over the past, well, since the beginning of the entire financial markets, right? There's always something. But in today's video, we're going to show you guys, once again, which companies I'm very interested on, how we can play these indexes, and especially how we can trade in today's environment. So, apologies for the humor to start off the video. If you guys thought it was funny. If you guys didn't think it was funny, well, my bad. Anyways, let's get into the video, shall we? Part number one is going to be the index rundown, as we always do. Take a look at the technicals, take a look at the rotation or lack thereof. Thereafter, we're going to get into our big tech names. Many of these tech names down 20, 30, 35% from their highs. Which ones am I buying? Are they at attractive prices? How much further can they possibly drop? And at the very end of the video, of course, we'll be taking a look at everybody's favorite section, which are the biggest gainers and losers of the day. And today specifically, and even Friday, we are starting to lose some of the last remaining market bulls. A lot of the semiconductor names that were holding up very well. And one aspect of the market in semiconductors, which was photonics, one of your lead bulls in the market. Now, unfortunately, in this liquidation break event of the markets, we're losing even the last set of bulls. So you might be still looking into the last leg of liquidation flush, which we were talking about as recently as last week, right? When you start losing all the market breadth, you start losing your last bulls. And a lot of your indicators start showing massive oversold conditions and very bearish sentiment. That's what you like to refer to as a liquidation or the capitulation break. So keep that in mind. With all that being said, let's get right into the action, shall we? So the S&P down 0.33, the Qs down 0.76, And if you take a look at the heat map right here, it wasn't that bad. But today, it was a story of the last remaining bulls in the market, unfortunately, all getting sold off. Now, software and some big tech names did well, but for the most part, semiconductors led most of the declines today. A lot of these names had been holding up really well. NVIDIA has been holding up pretty well. Micron, obviously, now falling down about 10% on the day. And then you have a bunch of semiconductor equipment manufacturers, and their charts were all holding up as well, right? ASML has been holding up well. KLAC has been holding up well. AMAT, LRCX, all those names, unfortunately, now joining Team Bear and looking like they want to go for the monthly consolidation style rollover, something that they've been delaying, but maybe you can't delay the inevitable, especially when the rest of the market is already into market consolidation, monthly consolidation, that is. Some of your industrial names down as well, more specifically, a lot of the industrial plays in line with the data center and AI trade. However, the rest of the market, guys, today wasn't that bad. But I will remind you, several of these sectors were in oversold conditions to start off the week. Financials has been in oversold conditions the last few days. Healthcare has also been in oversold conditions. Consumer defensives have also been in oversold conditions. So keep that in mind. Today, just a bit of a relief market breadth bounce, in my opinion. And overall here on the one-day relative, you can see that even better. A lot of sectors participated well today, but the ones that were down were just too strong and too heavy of a weight. Industrials down a lot, and technology, namely semiconductors, were your lead market bear in the markets today. 1 week relative, unfortunately, there's only 3 sectors that are currently in the green. Energy, basic materials, which is basically just a bounce off the bottom after big liquidations in gold and silver, and utilities. Utilities has been surprisingly holding up well, as paired with their energy counterparts too. And consumer defensives now, after being oversold for a while, getting a little bit of a bounce, right? But where is it bouncing from? It's bouncing from deep oversold conditions. It's not as if they're anywhere close to the highs. So keep all of that in mind. So before we get into more technical analysis, guys, we're going to kind of look at what we have in terms of news headlines and statistics for the day. And once again, go over what is exactly happening in the markets. Well, this morning, you actually had a pretty decent pop in the pre-market. And unfortunately, we sold all of that down and even more. What was that pop? Well, once again, it was President Trump, similar to what he did last Monday, coming on a Truth Social and trying to post some clarity on the ongoing situation in the Middle East. The United States of America is in serious discussions with a new and more reasonable regime to end our military operations in Iran. Great progress has been made, but if for any reason a deal is not shortly reached, which it probably will be, and if the Strait of Hormuz is not immediately open for business, we will conclude our lovely stay in Iran by blowing up and completely obliterating all of their electric generating plants, oil wells, and Karg Island, and possibly all desalination plants as well. So starting off the message in a very light tone, talking about ceasefire, and then saying, well, if you don't, it's going to be hell and high water, and we're just going to blow up absolutely everything, right? So that was the message. It was kind of received in a mixed fashion this morning. Unfortunately, the market's just not believing it anymore, right? Now, there's been a few of these styles of tweets and quote-unquote pumps in the markets in recent weeks, and they've all mostly led to the markets having a decent day. But this was a bit different, right? This is arguably the first time that the market just said, no, we don't really believe it. We're going to sell off anyways, as people continue with a very bearish lean right now. Now, you might see the futures market higher in the post session right now. And that's because we just got this article here from the Wall Street Journal. And when I read you the headline, just remember what I just read to you about the Truth Social post right here about wanting the Strait to be open for business. As I was filming this video, I noticed a sharp rally here in the futures market overnight. And it was this headline right here: Wall Street Journal, Trump tells aides he's willing to end the war without reopening the Strait of Hormuz. Not exactly quite sure how that would work, but the markets apparently did like it. You guys know the US's involvement needs to have direct involvement in the Strait of Hormuz right now because, well, arguably, they've been the aggressor in the entire Iran situation. But it is true that the US does not entirely rely on products coming out of the Strait of Hormuz, which is why Trump wanted the other G7 members to help secure the Strait, because arguably they rely a lot more on everything that comes out of there than the United States does. So possibly the market liking this just because just the United States pulling out of the conflict would be good for its own markets, but then there would be a lot of damage done still abroad. And speaking of the damage still done abroad here, guys, from beer to cosmetics, I apologize. A few of these headlines will be rehashes from yesterday's video, but they're still very valid, right? From beer to cosmetics, Asia feels the full force of war-fueled energy crisis because of the petroleum derivative products, right? So everything in terms of packaging, Think of all the plastics that are used in consumption products every day. Those are petroleum derivatives, right? And unfortunately, with no oil coming through the strait, a lot of these Asian countries are having to raise prices on the average goods, especially the ones that use heavy plastic packaging. So not only are you currently having oil shortages in places like Southeast Asia, Indonesia, right? Thailand, Cambodia, the Philippines, all of those countries are struggling right now. But even currently in South Korea, Japan, they're starting to feel it not only at the pump, but also in oil derivative products. So the Asian markets so far have been hit the hardest from this ongoing oil crisis. Moving on, number two, you also had a few headlines over the course of the weekend. People in Australia panic buying gasoline at the pump, which prompted their prime minister to reassure the population over the current fuel supply. Australia, if I'm not mistaken, has about between 45 and 60 days left of fuel reserves. And beyond that, it's anybody's guess. They heavily rely on the Strait of Hormuz as well. So just more additional pressure, everything in the Pacific Ocean that way, right? Everything that relies heavily on the Strait of Hormuz. So not only Asian countries, but now also a massive country such as Australia feeling it. At the current time as well, you got EU ministers seeking a united strategy on energy price crisis, because although a lot of the damage right now is being felt in the East with the Asian countries and continent, it will eventually trickle in to European countries as well. And the European Union is currently trying to front run the situation by, coming to a common consensus as to how they would address the situation. But with oil out of Russia being very low right now in terms of imports into the EU, and with the Strait of Hormuz continuously being closed, curious to know what exactly their plan of action is going to be. So far, no concrete action in terms of either joining in efforts to reopen the Strait of Hormuz, and right now they're only relying on their strategic petroleum reserves. Moving a little bit further here, the headlines that shook the world over the course of the weekend: the Pentagon was preparing for weeks of ground operations in Iran, but as we keep getting Trump updates every single day in terms of ceasefires, peace negotiations, it seems to be a bit of a last resort. So hopefully it won't come to it, but this is where we currently stand. And now, moving into some statistics, once again, to show you guys that even though you look at this chart, it looks pretty brutal right now, right? Just sheer downside and accelerated moves to the downside. You're into oversold conditions, and many things are firing off the signal that you could be due for a relief bounce soon. Number one, fear and greed index at a 9 right now. Market momentum, extreme fear. Stock price strength in terms of net new 52-week highs and lows on the New York Stock Exchange, pretty much at 0. No companies, maybe other than a few oil companies, are hitting new 52-week highs. Everything else significantly off their highs. Stock price breadth also at extreme fear reads. We go over that quite frequently in terms of the percentage of stocks above their 20-day EMA. That's at 26%. Has it usually been synonymous with a local low and synonymous with good opportunities to buy for long-term portfolios? Absolutely. Percentage of stocks above their 50-day EMA, same concept, right? A very low print of 24%. So with the indexes oversold and market breadth having absolutely collapsed, is it still a good time to buy? Yes, but slowly and carefully, and not on absolutely every single company in the books, right? So fear and greed at a 9. It's been a very long time we've had that. AAII member sentiment. Where do participants feel the market will be in the next 6 months? 50% of everybody is bearish. I'll remind you the peak that it got to last year in April was about 62%. Usually, when you were taking the contrarian bet, especially down this much, the S&P down 10, the QQQ is down over 10, and many of your favorite legacy growth companies down 25, 30, 35%. Has it been a good opportunity to buy the dip? Yes, but slowly and carefully. Not necessarily for short-term swings to the upside or call options or things like that. No. Longer-term buys, right? Moving on further here, retail volumes still stuck at the lows. You'll see that it's even below last April lows and some of the lowest retail trading volume that we've had. And usually this is always synonymous with a bit of a contrarian bet environment whereby you would rather want to be a buyer when nobody else is buying. Moving on here further, S&P put volume over 8 million. This has only happened a few times over the most recent 3-year history print that we have. And usually this is synonymous with some local lows as well, whether you cherry pick the data in 2022 or 2023 or 2025, on multiple occasions during 2025. When we get down there and everybody's positioned one-sided only, once again, you can get a snapback recovery rally quite quickly, even when you're in oversold conditions and with low market breadth such as these. So keep that in mind. Usually when everybody's buying insurance, sometimes it's not exactly when the house burns down. Moving on further here, S&P 500, 0% of all S&P 500 financials are above their 50-day EMA. Today, we had a nice little bounce on financials, but still, has there ever been a bad environment to buy when 0% of the S&P financials were below their 50-day or were above their 50-day EMA? As a matter of fact, no, right? So this usually tends to be at peak drawdown moments right now. You can see similar events happening in 2022, depths of the bear market, 2020 COVID panic lows, and even your end of 2018 panic sell-off there as well. Your average over the next 2-3 weeks and then months usually tends to be a very high hit rate here in terms of positive outlook percentages. Moving on further, we got historic foreign investor sell-off in Asian emerging markets, even over and above the levels that you saw in the pandemic and the Ukraine war. So obviously with Asia being hit the hardest with this energy crisis, that is an ongoing thing. Even if you reopen the Strait of Hormuz tomorrow, guys, these sticky prices are going to last, but the fear, the immediate short-term fear may not be as high, right? So keep that in mind. Massive selling across the board, not only in North America, but in many emerging markets, especially in Asia. Moving on further here, S&P Fear and Greed Index, when we are at a 10 or lower, you will notice that this does tend to be a slight bottom here in the S&P. You'll notice that it does tend to sometimes lead to a bit of a relief rally. It doesn't mean it's the absolute lows. It just means that in the context of a big downswing, can we be expecting a bit of a relief bounce and possible better price action? Yes, you'll see many times in 2022 here where it does identify correctly local lows before a sustained bounce, right? And that's what we're looking for in this market, especially if you guys know the way that we've been trading on this channel, selling put options on days like today, high VIX, oversold conditions, and then you're looking for a bit of a bounce just to pocket the money for those trades and wait for another decline. Well, this is the perfect stuff that you would be looking at. But also, if you are looking to add to positions, right, and you're looking for a confluence of factors to add to long-term positions, well, this would be one if you're sitting on cash. Decent time to be deploying. I'm not saying deploy everything, but this is when you would start the nibbling function of a DCA. Moving on further here, NDX in terms of your net money flow is very, very, very low right now, guys. If I just move my head around here, you'll see that we're very low on the chart. And to the flip side, you'll notice that all prior events going back over the last 2.5 decades, right, usually do line up with some of your local bottom lows. It does not mean that it's your absolute true low. It just means, once again, for purpose of short-term positioning for any short put options that we're doing in the markets or any longer-term buys, it's a very decent proposition to be buying when so many names are oversold, right? Because even though it may not be the true low, many companies, guys, right, they may have their bounce and then they may not set another low again. So keep that in mind. Moving on to tech premiums. So even though we have oversold indicators, what about the valuations? Because we could be oversold, but still be expensive, right? That being said, are we expensive? The tech premium is the cheapest since 2019. The valuation premium has all but collapsed, right? Not since 2019 have we seen valuation premiums compress so much. So when we're looking at stocks like Microsoft or Meta, just a few that come to mind, or even NVIDIA, right? The premiums have evaporated. So at least you know that you're not paying expensively if you are buying stocks today. Moving on further here, S&P 500 tech sector, next 12-month price to earnings ratio. Once again, back down here, 21.1. As you'll see, they're the lowest valuations, even below those of last April. So very good. And even in spite of tech being the leading sector here for forward earnings estimates, they are the most profitable companies. They will be generating the most amount of earnings lift. However, they are no longer trading at that much of a premium relative to the S&P, even though they're having the largest contribution. So keep that in mind. Moving on a bit further here, NASDAQ Composite down in the 10 of the last 11 trading weeks. And we know it's been very brutal this week, guys. This year, excuse me. How brutal? Well, if you take a look here, there has literally only been 3 weeks, and this is exactly the same as last year. Since the start of the year, if you guys have been feeling a little bit down because of the market performance, right? You would not be alone. As a matter of fact, we have only had 1, 2, 3 positive weeks in terms of percentage changes from the prior weeks. 3 positive weeks this entire year. That's it. And it's almost been 4 months, right? Well, it's been 3 full months at this point in time. Take a look at last year. We started off the year. This candle right here was your first week. It was down 1 green week, 2 green weeks, and then the last one right there. And then you had the tariff liquidation break, right? Same concept, different year at this point. So if you're feeling kind of a bit down because the portfolio has just been doing nothing but kind of sliding, you are not alone. We had the exact same sentiment last year. And I know 3 weeks only out of the last roughly 11 is quite brutal, right? But that lets you know how heavily the positioning is right now to the downside and why you should probably be looking to make some contrarian bets in terms of long-term investments and or playing the volatility through the wheel process that we teach you guys on the channel as well. Moving on further here. Tech stocks have suffered repeated beatings. You'll see the number of 3-day streaks with over 1% intraday losses in the past month. We are now at 4. Okay, 4. It means that every day, right? There's been so many streaks of 3 days where tech just drops 1% every single day, right? At 4. Usually, this tends to kind of mark a local bottom, as you'll see many times. I've been listed on the chart, and I always use the word local bottom because it doesn't mean you can't get more. It just means that this leg of the sell-off is maybe running out of steam. However, I'll show you the charts after, and we might be setting up for a bit lower of a move, but maybe not all at once, so keep that in mind. Moving on a bit further here as well. On a trailing 6-week basis, even hedge funds are capitulating. Net selling is the 3rd largest over the past decade and approaching the levels seen during COVID. And to a lesser extent, during Liberation Day, some signs of capitulations are starting to emerge, which is what we've been talking about, right? This is the liquidation/capitulation break. It should make you feel somewhat nauseous, especially if you have not been in the markets too long, right? Even the hedge funds capitulating right now, right? Look at the amount of money that they've just been dumping and dumping and dumping and dumping. So even hedge funds, they don't always get it right. But what this doesn't tell you is the fact that they were also very over leveraged leading into this position. So I wouldn't necessarily say that they are, net short the markets. However, they have been liquidating a lot of their assets, just trying to protect and getting rid of that leverage. Look at how low we've actually come down right there. And last but not least, your CTA positioning, right? CTAs are essentially the algos for the most part, right? So you see here that CTAs are set to buy in every market scenario over the next month. Why? Well, because they fulfilled their own prophecy, right? This is what they wanted to happen. They've positioned for it. You can see the amount of momentum and the algorithmic selling that's been happening over the course of the past month, plus fear-based selling from retail, plus deleveraging from hedge funds. And now they've kind of hit their mark, right? And usually when you come down this low, look at the standard deviations, right? When you come down this low, usually that's synonymous with even the algos letting up on the steam to the downside because the risk to reward is deemed to be unfavorable for them. And you know, they are all about risk to reward. But essentially this means is that most of the move, most of the profit that you would have been able to make has already been made. And right now the risk reward is just deemed to be a little bit unfavorable for those CTAs. So keep that in mind. So all of those statistics to tell you guys, right? The exact same conclusions that we've been driving over the course of the past month in this market, right? It is still a market to be using the volatility to your advantage. If you're trading the wheel, it's very simple. All you do is just you wait for big red days like this, oversold conditions, very weak market breadth, and when the bounce does come, because it always does come, right? You get your little relief bounces here and there. We can exit the positions and then take our profits and then reset for a possible next leg down. Nobody's trying to be a hero in this market. You guys aren't seeing me buying leap call options or playing directional longs or saying, yep, this is the bottom, load the boat right here, or saying, I've been sitting on 30% cash for the past month and I'm deploying everything now. No, for long-term portfolios, it's very simple. Every single paycheck that you have, 10, 15% should be invested for your future in the markets in your favorite companies or ETFs if you're that type of person. And how do we trade the markets recently? I'm not doing any leap call options right now. I'll be waiting for favorable price action on the other side of things, possible recapture of some EMAs, or at least favorable price action with an end to the conflict or ships resuming through the Strait of Hormuz to position on any long bias trades, at least trades with size, right? For now, I'm just very happy to be a volatility seller in this environment and add to my long-term positions in a very slow and calculated manner on companies that have come down tremendously from their local highs. That's everything I had for you guys for the introduction. Now, let's get into some charts, shall we? Okay, so looking at some charts, you guys already know we highlighted the oversold conditions on the S&P. Sorry, my big head is in the way. Oversold conditions on the S&P and oversold conditions on the QQQ. So you could get a short-term relief bounce. We're in the final tail end of our last minor support level. There's not much here, but it is one below that. You're down here 625 to 620. Doesn't mean that just because we are oversold, it can't get more. It just means that when we come into this regime, right, the end of this leg of selling may just be complete and we may be looking for a bit of a relief bounce. It will probably be a dead cat bounce until we get the conclusion of the situation in the Middle East, obviously, right? But one thing I want you guys to pay attention to, guys, is these monthly moves. we are about to close the monthly candle and the very rare candle that I only show once per quarter, the quarterly candle in one day. Tomorrow is the end of the quarter, end of the month of March. Look at these candles. They do not look very inspiring, do they? Which is why I say I do believe the expected measured move, if the conflict should continue and positioning would remain still very bearish into the short term, into the first few weeks of April, you have a very good likelihood of coming down here, which will be into the January and February highs, 26 EMA, and that will be a top to bottom correction on the S&P of about 12 to anywhere between 12 and 16%. So please keep that in mind, right? One more candle to the downside, similar to what we saw during the Liberation Day events, right? Or even many times past, like down here back in 2018, would not be something that would be foreign to these charts, right? It would just be looking still for a monthly higher low, big pullback. When you see a candle close potentially at these lows like this with big momentum and big bearish sentiment, it's very tough to stop it dead in its tracks. So you could be looking for follow through, probably not all in an absolute straight line, but still, right? Just a sequence of cascades of selling pressure until the market fully exhausts itself and even comes into weekly oversold conditions, something that we don't have yet. So in this market environment, don't try to be a hero. Don't say, this is the bottom, this is the bottom, this is the bottom. That's not how we're looking at things, right? If you really want to take trades to the upside with size, well, there's a good mechanism to just be waiting, right? There's a good criteria for us to just be waiting for favorable price action to show again and possible being closer to an end of the conflict or closer to a resolution in the conflict, which would give you more favorable price action and at least have some form of a tradable bottom. And tradable bottom is only going to come when you reset the price action trend, right? Until you get the daily uptrends, it's very tough to just sit here and say, this is the bottom, even if I'm, the type of person that's cautiously optimistic on the markets, right? You just got to see what the chart is telling you. And the chart is telling you long positions right now are just not going to do too well, no matter what sector it's in currently, unless you are very risk tolerant and you just want to keep calling these bottoms with tight stops, right? That's up to you. I'm not in the business of doing that. There are times to put our foot on the gas in the markets when we have beautiful uptrends, and there are times to be a bit more patient, and this is definitely a time to be a bit more patient, at least for swing trade longs. Moving on to the QQQs right now, same concept, right? Big liquidation break right here, pure daily downtrend and into daily oversold conditions. You're into one of your final short-term areas of support, 562 down to 553, and then there's a big area here where there's really not much, not gonna lie, right? So that could take you once again into your monthly measured move. Take a look at the monthly candle close, take a look at the quarterly candle close, which is why I say worst, maximum pain, probably somewhere down there into the 3-month 12 EMA and also the monthly 26 EMA, and that again would be 530 down to about 510, this little pocket right there. That would be, a pretty spicy midterm year sell-off between 15 to about 20% of the downside, arguably roughly the same. It's very rare, guys, that you get back-to-back years with 15, 20% sell-offs, but I guess that's the type of market environment where this is the type of market environment where you could definitely see that, right? But once again, short term, you could see a relief bounce because we have so many indicators that are oversold right now. But unfortunately, unless you get full resolution or more clarity on the conflict, right, you may just erode. So play the volatility is the simplest way that you should be trading in the markets right now. If you're a long-term investor, well, you just got to keep DCAing those very good positions because hopefully none of you, at least I'm sure a lot of you that watch this channel, you guys should not need the money, at least for the next 3, 4, 5, 10 years when you're buying some of these companies. And it's definitely not a good idea to pass up some of these opportunities just because you're possibly expecting more downside. If anything, you would take a DCA approach because no matter how much we look at these charts, no matter how much you claim to be the geopolitical expert, right? Picking absolute true bottom, guys, is for the most part a fool's errand. Moving on to XLF right now. XLF financials had a bit of a bounce out of oversold conditions right now, but the bears still in full short-term control, right? Huge selling pressure right now. No stocks in financials doing very well. At the current moment, support stays put 48 down to about 46.75. So keep that in mind. Weekly, not yet oversold conditions, but very close. You are also down tremendously from the top, 14%, and the monthly, well, the monthly's already in your corrective environment. Lost the monthly uptrend right now, and if you take a look at the quarterly, which closes tomorrow, very close to a quarterly back test down here, which is why I do think XLF positions down here into the mid to low 40s. Very attractive propositions, whether it's Visa, whether it's MasterCard, whether it's American Express, whether it's SPGI, whether it's names like Bank of America, down like, a good 15, almost 20% from their highs, right? There are a lot of very good opportunities in XLF right now, but you also have to take things in a very slow fashion and just DCA into these positions if you've been looking for them for a long time. Or if you're playing the wheel strategy, you wait for big red days, sell some put options significantly below the markets, and you guys know that you're getting a fantastic deal on some of these businesses, even upon assignment if the market does assign you. Moving on to XLV Healthcare right now, even healthcare still struggling, guys. Healthcare into oversold conditions as well. Keep that in mind. Big sweeping daily downtrend below previous support, which is now turned into resistance, 148.5 down to 145. The momentum here, the velocity is very strong, right? That's a big move from the top, guys. 10.5% from the top, straight line down almost. Healthcare was fairly resilient, but I won't be playing healthcare just yet. I need to see a slowdown in the price as we move towards our lower support range, which is 140 down to 133. Who knows? Maybe we get the same prices as last year when I took those leap call contracts when the sector was looking like it was one of the last ones to turn. Maybe this time around as well, if we can see a turn in the markets, healthcare, I would be quite interested down here, but no XLV positions for me just yet. Moving on to semiconductors, your last remaining bull in this market environment, fading very quickly, right? Daily downtrend. So keep that in mind. Weekly also, weekly downtrend, and now finally embarking into the ever so elusive monthly consolidation that we've been talking about for a while here, guys, right? So keep that in mind. It's been a while. They held up better than most, but even semiconductors right now, they're just not strong enough. The market selling is just too powerful for them. So you'd be looking down here, 345 to about 325. It would be a nice sell-off top to there on semis, 22% to be specific. And I know it doesn't look like much because when you put this on the 3-month time frame, I mean, if you look at this time frame alone, it looks like you could have substantial more downside, but there's nothing saying that you can't just have your 3-month EMA curl up here over the next 2 quarters. Even if you do start off the next quarter a bit soft, it doesn't have to absolutely touch every single time, right? You can just get a higher low fashioned into here and then move a little bit higher. We know semiconductors have been very favorable recently, but not all semiconductors, right? We know on the channel, which is why I'm not playing SMH. I'm not playing the ETF. You can have some intra-sector rotation, meaning I'm not buying ASML up here, which is why there's a big X on this chart. I'm not buying the charts with monthly timeframes, at least for my long-term portfolio, right? That look like this. No, there was a time to do those, and the time was down here. Now you're curling over on some of your market leaders. Even Micron is currently curling over right now, despite having very strong demand. Nobody questions the demand, right? It's just these names haven't consolidated at all. The names that I am looking forward to buying are the names that have already been into months worth of consolidation, such as Broadcom, such as NVIDIA, which hasn't done anything in the past 9 months, such as AMD, which has also been consolidating now for the better part of the past 6 months, right? So there are semiconductor names that I do want to play, and it's probably going to be their turn to rotate higher, whereas you may have some other declines in some of the other semiconductor equipment names that have just been going almost straight up, guys, for the past like 10 months and now finally embarking. So I'm playing semiconductors on an individual basis, looking for the rotation within the sector as opposed to playing the entire sector. Hopefully that makes sense. Moving on to the Russell right now. The Russell, also a very big red day. Not a very good day for small cap stocks today at all. Flushing some of these lows again into support. 242 down to 237. You guys know who's in control, right? It is the bears. Weekly, very solid downtrend right there. And look at this monthly candle. Doesn't look very good. I don't expect the bulls to put the brakes on right there, but if we do have a bit of a sequence here of lower lows and lower highs and just continue this trend, right? Where could you go into for max pain? Probably coming right back down there, guys. 231 down to 225. And that would be a very big retracement, guys, overall, unwinding most of your monthly move since the November lows right there. And it just needs a bit further consolidation. Even on the 3-month time frame, you can see that even better, right? Just needs a little bit more of a push down into here to get better pricing. So small caps, I'm still a big fan leading into the next 1, 2, 3 years, but thematic small caps. I'm not playing the index. I'm playing names individually, and we'll go over some of those at the end of the video, of course. Into some of our other key sectors right here, XLP, consumer staples. Staples still very weak out of oversold conditions, but look at this bounce. Not a very strong bounce and into resistance. 84 down to about 82 is your mark. So if you're just graced with another downswing here, support stays put 80.5 down to 79.5. This sector, guys, was poised to be one of your best performers in 2026 before the war. You can tell the positioning started well before we even started getting a glimpse of any form of conflict whatsoever. And the reason is because the macro was improving, right? Interest rates were slated to come down. Inflation was slated to be tamed. Only the labor market was a bit soft. This was supposed to be the year of recovery for the consumer. Unfortunately, with the Iran situation, that has now all but set us back, probably for the next couple quarters at least, right? So I'm not expecting massive recovery rallies on consumer staples, not yet, right? Because the threats of inflation and rising input costs from oil are very real. So XLP still not the my absolute favorite sector. I was talking about if we pulled back here without the war, if you would have just casually came down and hunted for a higher low as part of a broad market rotation, I would have probably played staples. But now at this stage, with the impacts from the war of Iran, because we know if the conflict ends tomorrow, guys, I'm the first person to tell you, right? Much of this stuff is not going to go away. It takes a long time to get oil and other agricultural products and fertilizers and all that good stuff to end markets. And a lot of the damage that's been done, is still going to be felt in input costs for these companies. So do not be surprised if these companies issue somewhat lackluster guidance over the next earnings call. Moving on to XRT right now, consumer retail. This was also supposed to be the year, finally, for consumer retail after doing nothing for the past, 3 years? This was finally supposed to be a year in which we had more visibility into the recovery of the consumer because of lower inflation, lower interest rates, etc., etc. Once again, that's all been delayed or rather stalled by a very large margin by the Iran situation. So big pullback. I'm not really interested in playing consumer retail right now. I'll play some tech, right? Because tech obviously stands to lose the least from this situation, but anything tied to the consumer or inflation or interest rates, those are the sectors that you kind of have to pause on. It was looking great to start off the year and now not so much, although we are into support down here, 80 down to about 73 bucks. Moving on to utilities right now. Utilities has been quite resilient throughout this entire conflict right now. However, the bears still in short-term control, looking for a lower high, possibly under your current. I mean, if I put a box there, sorry, I should be more diligent on my use of boxes. You can see that big resistance right there. Right? If you just get shot down again, where are you heading? You're heading for another unfortunate weekly swing to the downside. The sector overall doesn't look that bad, guys, right? Even on the monthly timeframes, bit of consolidation. But if we start off the month of April weak and consolidate a bit more, it's going to be looking for a very nice back test. And there's so many solid companies in utilities. If there's any sector that I'm a big fan of still playing this year, guys, it's some of the utilities names, because no matter what's going on, right? I mean, there's a couple different things working for us here, right? Let's take NEE, for example. Big data center exposure. That power for the data centers is not going to change, right? But what else is not going to change is that a lot of these utilities companies are providing alternate sources of power. So especially in times where there's a lot of pressure because of the price of the barrel of oil, well, that just means that other sources of energy are also going to be still in very high demand, and you could see a bit of a swap, right? But mostly I'm buying these for the data centers, but they have been bid up recently as just like a kind of counterplay to the rise of the price of the barrel of oil. Moving into real estate right now. So real estate also suffering. You guys clearly know why. We've priced out all forms of interest rate cuts throughout this entire year. So real estate is once again another trade that you'll have to put the brakes on, right? Not the best trade to be in at the current time. There will be a time to play real estate, and this year was really looking like it, right? Before the conflict, this is one of the sectors that I was paying the closest amount of attention to because of the lower interest rates and possibly finally freeing up the housing market and getting the consumer in a bit better shape. That is now stalled. Interest rates are back up to the highs. And unfortunately, the consumer will have to deal with the pricing power pressures, and the housing market the recovery of the housing market probably stalled for another few quarters. Moving on to energy, last but not least, XLE on a day where the price of the barrel of oil was net up, came up over the past few days, right? XLE with a curious profit-taking candle at the top right here, right? However, still a very nice natural daily uptrend, so keep that in mind. Looking for a sequence of higher lows. Your 12 EMA has been something that they have been riding this entire time since the beginning of the year. So obviously, just like when we look at other names, right? Names that had great momentum, such as Micron or like gold, right? Micron was the 12 EMA on the weekly, right? You lose this after holding it for 6 months, you know that the same trades that worked before are not going to work anymore, right? Gold, same concept. Gold, you lose the weekly 12 EMA after not having lost it for what? A year and a half, almost? Well, you know that the same trades that you're used to are not going to work anymore. XLE, same concept. This time, pay special attention to the daily 12. If you come back too hard, lose a 12, engulf this entire move, you're setting up for a lower high into a lower profit taking, even though oil may still stay high, guys. It's just natural swings of the market. So be cautious on your energy trades, right? I see far too many people trying to chase call options all the way up here, at least in the last few days. So just be very cognizant of your areas of interest here. 57.75 is your daily high or low, and watch this 12 EMA like a hawk if you're trading. Now, moving on to some other things like the VIX. The VIX not moving higher today, right? So the VIX still at 30, still a great environment to be selling options in. Usually, right, when you get VIX very high, oversold conditions on the indexes, very low market breadth, you guys know the drill. You're expecting some oversold bounces in the overall markets, and it's a very nice area to still be selling some put options. So on big red days, such as today, when you have so many names down multiple percentage points, crushed from the highs, decent environment to be selling put options way below the market. So keep that in mind. That's how you should use the VIX. Moving on to maybe some of our other commodity markets, such as gold and silver. Gold did not much today, right? Now gold is up about 1.6% after the this Wall Street Journal article has been leading to the futures market rally that you're seeing right now, and arguably the rally that we're seeing in gold in the after-hour session. So the bull's going for a daily uptrend. This, if you're looking for swing trades, guys, even though during times of conflict, even gold comes down. Why? Because people want cash. It's very simple, right? That being said, there is a swing trade opportunity here on gold in the event that we get a relief bounce rally. There is possibly a swing trade long to be had here on gold overall. Stop loss to go below 43.60. You're looking for the higher low into higher high sequence, and you would be targeting first level here would be about 47.50, and then the top end would be about 49 for further follow through continuation. So a trade that can be made with tight stops, arguably to the first target right there. The risk reward is not very juicy. Target number 2, it is, but keep that in mind, right? Gold, not looking too bad on the daily right now, but on the weekly, it's lost the structure. We've lost the weekly uptrend. We're below your 12 EMA, so the bulls are going to have to work very hard here to get that back. And in my opinion, that's only going to happen if you get an end resolution to the conflict. Monthly has cooled off the time frame. Nice bounce here off the 12 EMA. The bulls still in control of this one, but this was just much needed monthly consolidation. Same can be said about silver, right? Much needed monthly consolidation. Silver, same thing. If you're looking for the daily upswing break, take profit would be all the way up here into the 80s. Stop loss would be below this guy. Looking for daily uptrend recapture. Looking for a bit of a weekly upswing. Because then after that, they'll have to reset the time frames, right? Because we are in a weekly downtrend, so keep that in mind. And the monthly, beautiful consolidation here after such a parabolic rally. This was very much needed on silver, right? So long-term silver bulls are probably still in, and I completely understand there is still some structural demand deficits in the silver market right now, and long-term prospects on gold and silver are still looking very good, but they have suffered the same fate of volatility as the rest of the market, at least recently. Moving on to the prices of the barrel of oil. So oil, clearly, nice expansion move by the bulls right now. In terms of the weekly, I mean, you got a lot of pressure building up for this move that has been seeing in the oil markets recently. I mean, until you undo this, right? Looking for a higher low, possibly for further expansion on oil. In my opinion, unless you actually get the U.S. pulling out of the war, ceasefire agreements, you will not see the price of oil relent. If anything, it may just grind higher until you achieve that final resolution, similar to what happened in the 2022 phase of the market. So keep that in mind. I don't have any positions on oil right now. I'm not trying to short it. I'm not trying to long it. Not at all for me. But if you guys are trying to, my best of luck goes out to you, right? Daily is the bias indeed is still to the upside on that oil trade. So keep that in mind. On to Bitcoin and Ethereum, still not doing anything. Daily downtrend on Bitcoin right now, teetering on the edge of the final area of support, which is 65,000. So keep that in mind. Very weak bounce here from the bulls. You would not be surprised if the markets continue being volatile. You could get the absolute flush down here, 60 down to about 55. And the same thing on Ethereum. It's been a bear flag, right? Non-stop bear flag. So big moves down, weak bounce, flush, weak bounce. And now who knows? Maybe they have it in them to reset the price action. But first, you need to once again give me a daily uptrend. And they had it for a while, and now, unfortunately, they lost it. So once again, you'll have to restart everything from scratch and prove to me that you want to go for at least a weekly uptrend. And then I can say, all right, maybe your monthly lows are set. But at the current stage, possibly not. You may have to be a bit more patient on that crypto trade. That's everything for your overall markets. Now, let's move into our big tech names, shall we? Okay, so moving into big tech, we're going to go through these quickly because not much has changed. Apple is still suffering the same fate as the rest of the market right here. The area of interest for me on Apple would be down below here towards the 26 EMA, about 235 to 220. I haven't added any Apple shares in a very long time. Matter of fact, in some of the tariff lows, and I will not be doing so until the price reaches there because the valuation, although Apple is a very solid company and I'm glad to have it in the portfolio, the valuation is just not one of the best in the market. I'm adding to other positions right now, not yet Apple. I will also be selling puts down there if it comes to it, but as of right now, the bear's in full control. Monthly candle closes tomorrow, so unless you get a big shift in the market regime right now, the bears remain in full control, and that is the support area 236 227. Moving on to AMD right now. AMD down 3%, unwinding the entire big candle from that Intel and AMD pricing news last week. So a resistance stays put 230, 216, and down here 190 to about 180 is your current support. Same thing, the way that I'm trading AMD right now, short puts below the market on big red days like this. You can get some phenomenal deals down here, sub 180 to sell some short puts, which would be the gap fill from the OpenAI deal. And for long-term investors out there, just focus on the valuation because the thesis is definitely not broken. You're trading at very cheap prices right now, under a one peg for a substantial amount of growth that AMD should be having, not in the next 2 weeks, not in the next 2 months. No, we're talking about the next quarters and years of growth on EPS expansion and revenue expansion. AMD does have a lot of room to expand its market cap right now, sitting at about 320 billion. Moving on to Amazon right now. Amazon, same concept as the rest. The bears remain in full short-term control. Daily downtrend is very clear right now, and the weekly downtrend also challenging some of your earnings sell-off lows, right? So Amazon coming into big support right now, 197 down to about 189. Every Sunday, I tell you guys, if I can find Amazon to sell some put options in the low 190s, I'm a big fan. It's very close to that 200 weekly EMA, and the valuation of the company under 200 is very compelling, especially you go to 190, gets to like a 25 forward price to earnings, a 1.2 peg. This is at 210. I'm talking about if we go down there to 190, which is why I like this company. Long term, still a very good company to be accumulating some shares of this fantastic business. We know that Amazon has significantly underperformed the markets in the past 5 years. Not going to last forever. The amount of gains that they're making on AWS, advertising, many other aspects of their business, and the eventual cost savings from all of their robotics endeavors is substantial. So I'm buying Amazon here, not for the next 2 weeks, next 2 months or stuff like that. I'm buying Amazon because I expect it to be one of the biggest winners of AI over the next years. Moving on to Google right now. Google had to come down, and thankfully it is coming down right now. Big flush on Google from about 310 down to about 275. This is what we were talking about, right? We had this little prophecy, the head and shoulders, right? You see it better maybe on the weekly time frame. And thereafter, we also had monthly consolidation upon us, right? Google was just too high, too extended, and we were saying it deserves to pull back to the 12 EMA, right? If everything else is consolidating, there's no reason that Google should just be sitting up here, even though it is a fantastic company and I own a ton of long-term shares. You know, sometimes you just have to kind of see it coming, right? So next stop is probably down here, 261 to the downside. If we sell off a bit further, Google in big daily oversold conditions, but any relief bounces, guys, you're going to have to get the trend back. We'll see if they can do it from here, from the 200-day EMA. Google, one of the last big tech names to actually sustain above its 200-day EMA, right? A lot of them have lost it a long time ago. So you need price action repair on the structure for any swing trade longs. As of right now, the bears are in full control of the daily, of the weekly, and the monthly candle closes tomorrow. You can possibly see further downside on Google. Where would I be maybe inclined to add some shares on Google? I think probably down here, right? 260, 250. I would think about adding some shares. But even up here at 280, guys, I mean, it's just not the best deal in the market. It's fair at 24 times forward earnings and a 1.63 peg, but there are companies that are cheaper. I added all of my Google shares down here. Now it's time for me to add to other companies, such as Meta. Meta down here right now, up about 2% on the day, but still bears in full control. Big oversold conditions, clear daily downtrend, and into the final area of support, the big boy. 525 down to about 484. The tariff situation lows, the 2024 highs, a lot of price action right down there, guys. Daily oversold conditions, not quite on the weekly just yet, but Meta is a company that's down from the highs right now, 33%, right? And at 570 or lower, I mean, this is like 5% lower, right? Under a 20 forward multiple, at a one peg or even under right now, a 5 or something, 5 and change price to sales. I think the price of Meta right now to be adding to the long-term shares is a very decent proposition. No leaps for me. I need to see some repair on the price action on the indexes for any leaps in the market right now currently. However, long-term biased shares or selling put options well under the market, probably my two favorite ways of playing this company. Moving on to Microsoft right now. Microsoft up about 0.61% today, but doesn't really look like much. Green day, but another red candle. Bears are in full control of this chart right now. We know it's deep oversold on the daily RSI. It's deep oversold on the weekly at levels not seen since 2006. That's the last time Microsoft got this oversold, and we are almost at 2021 prices. And I keep bringing this up, guys. If we're not buying Microsoft down here, I don't know what we're possibly doing, because in 2021, at the same prices, they had $8 in EPS, now over 16. In 2021, they had 168 billion in revenue, now 327. They've doubled EPS and doubled revenue. So if they're at the same price and they've doubled fundamentals, arguably the company itself is 2 times cheaper on a multiple basis than it ever would have been back there. So you're getting a phenomenal deal, right? Let alone the technical oversold indicators, let alone Microsoft rarely ever loses its 200 weekly EMA. The last time it lost a 200 weekly EMA this large, right, was 2011. It's been 15 years since they've done that, right? Big support down below, 351 and a 318. Adding long-term shares here, I think, is a no-brainer, and playing some short puts under the market, even if assigned, I would not mind. 350 down to 320 is your next area of support. But once again, on a lot of these stocks, guys, you need the daily uptrends. Until you get the daily uptrends, you can't say that we have a tradable bottom, so keep that in mind. Moving on to Netflix right now. Netflix, you got to give it to them. They're holding up better than most, right? That being said, the daily is still very choppy right now. The bulls are trying something, but if the markets prove to be a bit too strong, you will have a bit more weekly consolidation. The best part about Netflix is that it was a weekly downtrend for so long, since June, right? And now you finally got a very nice size bounce on the fibs. It's going to be tough, in my opinion, for the bears to reclaim all that downside. It was a nice 65% bounce, which means that all of this short-term bearish price action eventually can indeed lead to a weekly higher low for some possible expansion. Where I'm looking for Netflix, you guys know me, I'll add under 90. I added so much back here under 90 that I'm not in a rush to add any more. But if you do come down under 90, I will be playing it there. And also short puts in the mid 80s. That trade will be back on the table if the stock does move a little bit lower as well. Moving on now to NVIDIA. NVIDIA down 1.4%. Teetering on the edge right now is NVIDIA. 165 to 170 is the area of support that they have not lost, guys, since last July. So keep that in mind, yeah? Daily downtrend. But we've been talking about this the last few weeks. NVIDIA was kind of like the last one to kind of hold up its price better than most. But if the market proves to be too strong, you're going lower. And where is the next area of support? It is 150. The highs of early 2025 and late 2024. That would be also a monthly downtrending scenario for the stock. The monthly candle closes tomorrow. Early into April, can we see a flush down into there and a 3-month pattern of just a reset into the price? Absolutely. It wouldn't be the first time, right? NVIDIA does this sometimes. I just think it would be one of the best. It's already one of the best deals in the market. Down here would just be a no-brainer buy. So I'm leaning into my long-term portfolio buys, right? I started nibbling for the long-term portfolio. Low 170s is where I was nibbling, and I'll keep buying through about 150. I wasn't buying anything up here, 190s or 200s, no, but 175 or less down through 150. I'm a big fan of adding to the NVIDIA position and also playing short puts well under the market conditions. You guys saw yesterday's video. Today was a very nice opportunity to find some short puts in the low 150s. If you're assigned down there, you should be very happy because you'd be buying NVIDIA so cheap. At 2026 forward price to earnings multiples right now, it's trading at a 20 and a 0.87 peg. Very cheap. Moving on to Tesla right now. Tesla also just suffering the same fate as the rest of the market. Down, 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 down. It's just been nothing but down almost every single week since late December, which is very funny, right? They literally peaked the exact same week in December of 2024. And then they peaked exactly at the same time in December 2025. So poor Tesla. Doesn't really like December's, does it? Monthly consolidation, monthly candle will likely be closing near the lows. And as a result, your April candle can come down into the 26 EMA 340. I'm not playing Tesla. I think there are better deals in the market right now. And the price action is just not conducive to any swing trade longs either. The bears still control all the time frames. So you need to see better price action. They got to turn the indexes around first, right? You got to give me some index momentum, better breadth, and better price action structure if you want to see me play a high beta, high valuation name such as Tesla. Keep that in mind. Moving on to Palantir right now. Palantir had it going for them really nicely. They tried for the expansion. Sadly, from last Thursday, the market's just too strong, right? Blasting through the support area as if it wasn't even there. 148 down to 140 was your support, because now, sadly, under it, it's going to be resistance. So the bears in short-term control. If the markets continue to be very weak, you're expecting lower high into lower low flush, and the absolute bottom, or rather, I shouldn't say absolute, but the previous bottom lows would be down here, 125. This has been the area since last earnings that I said for the first time in the longest time that I'm adding to Palantir shares. Under 130, around 130 or under, right? That is the area where I'm slowly buying back into some of the Palantir positions that I sold all the way up here, right? Now the valuation after a couple more earnings is a bit more manageable. Visibility into the sustainability of their growth is a bit more visible. And I honestly think still at this current time, there is arguably no better AI company in the market right now than Palantir as a pure play, but the valuation is expensive, which is why my buys are being done very slowly and at specific prices. Moving on to SOFI right now. SOFI just continues to be battered every single day. It's down to 15 bucks. It actually went below 15 bucks. So that being said, daily bears are in full control. The short sellers are in massive full control of this, right? This is just straight move to the downsides, right? Big short selling action, I'm sure, on this stock. Short sellers love this stock all the way back here, right? And then they got kind of swallowed for a while, but SOFI's price action has just been abysmal. Huge weekly downturn right now. The monthly candle closing at the low, so pay attention to it. Last area of support, 14. They're moving through this area like butter, right? Previous resistance highs, all support lows from back there, but no slowdown in the price just yet. The bears are just too strong, big weekly oversold conditions. So SOFI, you got to be very nimble in the way that you add to this one. If you're adding to this one, guys, you know, all-time highs for this year is clearly, I'm not going to say impossible, but likely out of the question, right? SOFI at this point in time is, once again, a long-term investment. There was a time to play SOFI for momentum, and we talked a lot about it last year. You're not playing SOFI for momentum right now. You're playing it for the recapture of the entire financials trade and being one of the fastest growing companies in that segment. At 15 bucks, it's trading for a 25 forward price to earnings, a 0.76 peg. So not all that expensive in terms of forward valuation multiples, but still, can it drop further? Of course it can. Look at this 3-month candle. Nasty. Really nasty candle right there, right? So I'm not going to give any downside price targets, but you guys know the drill. You break here, the only support that you got left, guys, is under 12, right? 12 down to 10 at that point, which would be a full recapture of everything and revisiting some of the levels not seen since last April liquidation lows. Huge sell-off on SOFI, guys. I still have my SOFI shares, right? But I don't have any significant upside trades ongoing right now. Only shares that I'm willing to keep here for the next 2, 3, 4, 5 plus years for the expansion of the actual business. Moving on to Uber right now. Uber, 1.06% to the upside, but not much, right? So still cascading daily downtrend and the weekly downtrend similar to the S&P, right? So sadly, this one as well, kind of just biting the dust right now. That being said, very close to the 200 weekly EMA and in my favorite area for long-term buys, right? Low 70s into 60, I think, is the no-brainer buy area for Uber. They're trading at some prices that you only saw 2024 or during the April tariff liquidation lows or in 2021. Once again, man, these 2021 prices, pay attention to them, right? Where was Uber back in 2021? Well, number one, they were a money-losing company, right? In terms of EPS and in terms of net margins. Number two, where were their revenues? 17 billion, now 58. So they've literally over 3x their revenues. They're now profitable, yet the market is giving them the exact same price. That is a very nice discount on Uber. So Uber is one that I'm adding to my long-term. I mean, I've had it for years and years and years, but I'm adding to some shares in the long-term portfolio. It's a great deal, and also selling some put options under the market down there. Just no swing trade longs for now. The market doesn't support it. And last but not least, good old Taiwan Semiconductor. So TSM, one of the best companies on the planet, in my humble opinion. TSM's been coming down recently, right? Daily, controlled by the bears right now. The bulls had a chance here to save it. Unfortunately, too strong, right? So they're even this one of your last remaining bulls in the market, right? Sadly, A2 got the good old head and shoulders prophecy pattern right now and are selling off weekly. Big sell-off right there, flushing your weekly lows. Loss of the weekly uptrend right now, and as a result, monthly consolidation. Look at this monthly candle, closes tomorrow. April can indeed bring you down into there. I'm not saying it's going to, I'm just saying the likelihood of it doing it, very probable. Look at the 3-month candle as well. Likelihood of further consolidation, probable at this moment in time. The reason that I want to play, or the area that I want to play TSM rather, is down here, guys, right? A touch of the monthly 12 EMA, which hasn't happened for a while, but usually when it does in the context of this big expansion phase, pretty good proposition. At 340, where it wasn't that bad of a deal, but give me TSM under 300 again, around here, like 290, 280, you'll be looking at a very low, arguably almost 20 forward multiple and close to a 1 peg. That's usually always where I like to buy TSM. That's mostly where I've bought it in the past, and all those buys have proved to be very efficient buys. Company has great visibility for the next few years. Just unfortunate that the short-term price action is causing the price to fade down significantly from the highs, currently down at 20% from those all-time highs set earlier in the month of February. That is everything for your overall market rundown. Hopefully you enjoyed. Now let's spend a good 10 minutes. Let's just spend 10 minutes on the biggest gainers and losers of the day. Okay, so talking about some of the biggest losers of the day, because I'm pretty sure you guys already know which ones did well. Cybersecurity and the rest of the market performed well today. The areas of the market that really suffered were in the data center /AI/ some of the high beta names on this list. As a matter of fact, they were some of your last remaining bulls, especially in the photonic sector, right? We spent a lot of time describing the sector over the past few weeks overall as one of the last remaining sectors with some pretty good bullish resilience. That is all unfortunately stopped right now. AAOI coming down below the lows. So even these companies, right, suffering a little bit right now, weekly into full consolidation. Next stop on AOI would be the 12 EMA down here. If they go for the full monthly, look at this monthly candle. Not very good. If you go for the full monthly retracement, you're coming back down to 60. Good opportunities for the long term, but unfortunately, any shorter term swing trades, the stop loss areas are fairly clear, right? Whether it's on AAOI or some of your other ones like Light Holdings, right? They are just not looking the best right now for further follow through, especially not in this market environment. Keep in mind other names such as Fabrinet, right? Clear weekly rejections right now. Names like GLW as well. Clear rejections from the highs right now. So just be careful on these names. If you're trading them, trade them with defined stop losses because they're losing key levels. And the same can be said about names like SanDisk and Micron, right? Names that performed super well, but it's just like gold, guys, right? When you lose a regime of price action that you have not lost in months and months and months, you really got to pay attention. Now, SanDisk is holding up better than Micron right now. They still have not lost this last area of support, nor have they lost the 12 weekly EMA. But if Micron is anything to kind of get a gauge from, that might be coming as well. Take a look at Micron, right? They had not lost that weekly 12 EMA since last July. It's just been straight upside, back test of the 12, and then further launch. They even tried it again right here into earnings. Unfortunately now, a bit of distribution underway on Micron. And even if you recapture price action a little bit, this whole area and all your EMAs become resistance. That's not what you're looking for big bullish expansion. They'll have a lot of price action repair to do here, right? On this chart, even on the weekly, you lose the weekly uptrend for the first time in a very long time. It takes a very long time to get back. If anything, it just shows you that you might be in for a little bit more monthly consolidation on Micron. The EMA is all the way down there at 250, fall down there to 200. Even I start to get interested for some longer form plays. Everybody knows these companies are cheap, but even EWY, right? EWY, same concept. This is Korea. SK Hynix and Samsung are like 46% of this ETF. You hadn't lost this guy since last April. Just sheer weekly uptrend with a lot of beautiful momentum, right? Nice, holding at 12 EMA. So when you get a price action regime change, the trades are not as easy, right? They're not as straightforward as just buying and setting the stop loss down there and expecting further follow through. If the stop loss is triggered, which it was, that's when you kind of have to wind down the trades and say, okay, even the market's best leading sectors right now are going into monthly consolidation. So EWY and the South Korea trade is definitely something up for revisiting at a later time, just not right now. The price action is not favorable to it. And down there would probably be a likely scenario of a back test curling up into the 12 EMA and would also be synonymous with very close to previous all-time highs. Once again, right, all of those parabolic trades, when they lose their price action, they all in the same. You remember last year was like IRN and people said there's no way they'll ever test the 12 EMA ever again. That was the sentiment up here. Okay. Names like Nebius, names like CoreWeave, right? And eventually, well, CoreWeave just didn't have enough price action, right? But they all eventually come down in a big fashion into monthly consolidation. It does not mean that these names don't have a phenomenal long-term thesis ahead of them. It just means that the price action has to consolidate sometimes. And that's exactly what you're seeing across the photonic sector, the memory sector as well, right? Two sectors that have been, let's be honest, right? Your last remaining bulls, at least up until a few short days ago, and after which they lost price action in a very substantial fashion. So you'll see most names here that are the most red have been some of the names that have held up the best. Bloom Energy, right? We know that we held up price really, really, really well. They held the support for a while. Throughout the first 3 weeks of the conflict, they were almost unmoved. In the last 3-4 days, as we've been talking about, right? As you entered this liquidation phase of the market, after losing the 200-day EMA, not being able to convert, and then when you saw breadth absolutely collapse, market sentiment absolutely collapse as people started pricing in the longer term aspects of the war, well, now even Bloom Energy is taking it upon itself to go through a phase of monthly consolidation. Great opportunity, though, for some of us that have been waiting for these stocks to come down to more manageable levels. Right down there, lower 100s on Bloom Energy for like a longer term position. Fundamental thesis is not broken, right? It's just up here, you could still make the case for some swing trades with the stop loss. Now, those swing trades are off the table. You'll have to wait for price action to reset. Now we can shift to some of the longer term positions, right? Because I wouldn't buy Bloom Energy up here for the long-term portfolio. It was an interesting one to trade with the stop loss, right? Because the price action was very good. but I wouldn't be buying up there for the long-term portfolio. Same thing with Micron, right? Micron was a fun one to trade up here, but I wouldn't be buying it up there for the long-term portfolio. I need a better discount. I need to buy when things are in a big consolidation phase, and I'm looking to kind of pick up the pieces when things go into big oversold conditions, either on the daily or they actually cool down the weekly timeframes a bit more. So those are the ones I'm looking for. Rocket Lab, same concept. Rocket Lab was a very fun one. Even I had a swing trade put on here with the stop loss, and it was looking great for some possible expansion here. Got some nice lift when I entered the trade with a stop loss below here, targeting lift up to the highs. Didn't happen. So unfortunately, it is what it is, right? Some of the best stocks that were left in the market in terms of, throughout most of this conflict, right, that started on March the 3rd, look at the price action. It was very good. But as you can see in the last 3-4 days, as you enter the liquidation phase of the market, everything gets sent down regardless of how solid the long-term thesis is. Rocket Lab for me down here, see, I wouldn't buy heavy Rocket Lab for the long-term portfolio up here, nor up here. But down here, you got me interested, right? So there's many high beta names that will be in very nice environments if you've been waiting for them for a while. Even some of the drone companies, right? Look at this defense ETF, right? Literally, the conflict started March the 3rd, and that was the top, right? The absolute top, and they've just been consolidating. Now, granted, we'd been on this trade for the past 3-4 months, telling you guys that because of the military budget spending over the next 1.5, 2 years is going to be such that this sector is going to get a lot of money, but still, you don't want to kind of get ahead of yourself. And we were saying, I'm not really interested in some of the legacy names that have just been printing the highs, such as RTX or, L3 Harris or, the LMT trade, which was blown off the top right there as well. NOC, which was also very high. But on the pullbacks, I am a fan, and specifically some of the drone companies. If anything, this war has taught us that drones are definitely the fighting mechanism of the future. So KTOS has been one that I've been waiting to build a position in for the longest time. Starting one down here, and even AVAV, right? This one sold off significantly from the top without much changes to the long-term prospects of the company. So these styles of sell-offs that offer me some of the companies I've been waiting for a while to build positions in, I'm very interested, right? Very interested, as a matter of fact. So, talking about the military names, the thesis hasn't changed. For the next 2-3 years, they'll be the hottest names in the market because they're getting the most amounts of investment. And let's be honest, the US is going to have to replenish a whole bunch of arsenals at the end of this conflict, and so will Israel. And you guys know, right? A lot of money will be spent on defense over the next 2, possibly even more years. So the money will flow back into these companies. It's just short-term price action. They're being sold off with anything else. The space trade, there's still so much money in the space trade to be had, right? Whether it's Rocket Lab or some of you guys really enjoy ASTS, it's just there's sometimes to buy them for the long term and sometimes to trade them. Recently, it's been a nice environment to trade them because they were holding up better than most, but now you're coming into some of the longer term buy levels, which is why for short-term trades, you guys see me talk a lot about short-term price action, daily uptrends, and holding support levels. For longer term positions, guys, 12 EMAs in the context of companies with great upside thesis is usually where you find me doing most of my activity in terms of longer term buys, right? That's why I use the monthly 12 EMAs on companies, right? For longer term positions that I would like to be establishing, okay? So those are some of the trades that I want to talk about today, just because those are some of the ones that were remaining, in terms of the last companies that had strength. So we'll talk about more tomorrow, depending on the price action, but those are mostly the ones that I wanted to cover. Shout out to NBIS as well. NBIS down here, you guys know the drill, right? In the 80s, I'm buying for the long term, 80s down to 70s. I'm a buyer for the long term. And when it popped up here, I was saying I was happy that I got in some NBIS down here, but now that they've unwound this entire move, I'll just be adding a little bit more because the long-term thesis for NBIS has not changed whatsoever. And even some of my favorite small cap companies, like some of the defense companies that you guys know, right? Very simple. I bought into these companies last year in the sub $4 range right here on Kraken. And thereafter, we took nice profits here in the Discord on a lot of these companies into the 7s, just expecting that very much perhaps these companies would fall with the rest of the market if things really got dicey, which is currently what's happening. So Kraken, I'll be very interested in rebuilding some of that position that I kind of sold off for a profit. 5s to 4s, right? Very nice long-term thesis on that one. AMPX as well. We bought into here at about 1080. We sold up here into the 19s. I'll be looking to rebuild some of that position as we kind of swing into these prices. Just looking for big weekly consolidations on a lot of these small cap names that we've covered a few times on the channel, right? So those are the names that I want to focus on, right? Just if we're buying these names on pullbacks, we just got to understand that none of these names have had their long-term thesis impeded by anything that's going on in the market currently. It's just the price action to the downside and the liquidation breaks are too strong to where even the longer term bulls are dropping, which is why, you know, that's also contributing to one of the reasons why the S&P and the Qs are just dropping in a more accelerated fashion, because now you're losing all sectors. Even the last remaining bulls are breaking down. It doesn't mean we can't find some phenomenal opportunities for the long term. It just means that short-term trades, right? A lot of indexes right now are paused pending price action repair on the actual indexes. Right now, you need everything to kind of come back simultaneously, because even the last remaining bulls are kind of off the table. So we'll spend more time as we move through this week talking more about other themes, you know, other energy plays and other large cap names, and also spend some more time you know, talking about long-term portfolio buys and things like that. We covered long-term portfolio buys Thursday, last Thursday after the close. So if you want to know what companies I'm buying for my long-term portfolios, at least large cap names, go back to last Thursday's video. I spent this entire last segment of the video talking about that. But that's all I had for you guys today. That's enough for today. Hopefully you guys have a good day in the markets tomorrow. If you enjoyed today's content, consider liking the video, subscribing to the channel. If you want me to do these types of thumbnails, put it down below in the comment section. I think they're funny. Maybe you guys don't think they're funny. I apologize. I know it's not a very fun situation right now, but still, you know, you got to kind of look at the bright side of things and inject a bit of humor in these dire times. That's it for me, guys. Take care. Have a good day in the markets tomorrow. See you after the close. Peace.